Ripple is a technology company with a bold mission to transform the way money moves around the world. In today's global economy, sending money across borders can be slow, expensive, and complicated, often taking days and involving multiple intermediaries. Ripple aims to change all that by building a network that connects banks, payment providers, and digital asset exchanges, making international money transfers seamless, fast, and cost-effective. With Ripple's technology, sending money overseas can happen in just seconds, not days. The process is designed to be as simple as sending an email, with lower fees and fewer delays. This is a game changer for businesses, families, and individuals who rely on cross-border payments, whether for trade, remittances, or investments. At the heart of Ripple's ecosystem is XRP, its native digital asset. XRP operates on the XRP ledger, a decentralized blockchain that's engineered for speed and efficiency. Unlike traditional cryptocurrencies that can take minutes or even hours to confirm transactions, the XRP ledger can settle payments in just a few seconds, making it one of the fastest blockchain networks in existence. This speed sets XRP apart from other cryptocurrencies like Bitcoin, which can be slow and costly to use for everyday transactions. Banks and financial institutions are drawn to XRP's ability to process thousands of transactions per second, with minimal energy consumption and low transaction fees. This efficiency is why Ripple's solutions are being tested and adopted by major players in the financial world. For investors, XRP is both an opportunity and a challenge. Its price can swing dramatically in response to market trends, news, and regulatory developments. Some see XRP as a potential long-term investment, hoping for significant gains as adoption grows, while others are wary of its volatility and the risks that come with it. The cryptocurrency market is known for its unpredictability, and XRP is no exception. Traders and investors experience both excitement and anxiety as prices rise and fall, sometimes within minutes. This roller coaster environment attracts those who thrive on risk, but it also serves as a cautionary tale for newcomers. XRP's journey has been shaped by dramatic price swings, often triggered by breaking news, regulatory updates, and shifts in the broader crypto landscape. Legal battles, especially with regulatory bodies like the SEC, have added layers of uncertainty, impacting investor confidence and market sentiment. What makes XRP especially intriguing is its unique position at the intersection of traditional finance and cutting-edge technology. It's a digital asset designed to work with banks, not against them, offering a bridge between the old world of finance and the new era of blockchain innovation. This connection appeals to both crypto enthusiasts and financial professionals looking for practical blockchain solutions. But XRP is more than just a digital currency. It represents a vision for a future where global payments are instant, affordable, and accessible to everyone, regardless of location or financial status. Ripple's technology has the potential to empower people and businesses worldwide, breaking down barriers and opening up new possibilities for economic growth. This ambitious vision is what draws so much attention to XRP. For some, it's a symbol of hope for a more connected and efficient financial system. For others, it's a risky bet, with price movements reflecting the ongoing debate about its future and the challenges it faces. The market dynamics of XRP are driven by a complex mix of confidence and fear. When optimism is high, buyers rush in, pushing prices up. When uncertainty or negative news hits, fear takes over, leading to sell-offs and sharp declines. This constant push and pull creates a dynamic and often unpredictable market environment. To truly understand XRP's appeal, it's important to look beyond the headlines and price charts. By examining the technology, the vision, and the real-world use cases, we can see why so many people are fascinated by Ripple and its digital asset. Whether you're an investor, a tech enthusiast, or simply curious about the future of money, XRP's story is one worth following as it continues to evolve in the ever-changing world of finance. October 2025 will be remembered as a pivotal month in the history of cryptocurrency. It was a time when the digital asset market experienced one of its most dramatic and sudden downturns, sending shockwaves through the global financial community. The crash didn't just affect a handful of coins, it was a market-wide event that caught even seasoned investors off guard. In the days leading up to the crash, there were subtle signs of instability, but few could have predicted the scale and speed of what was about to unfold. On October 10th and 11th, the market saw a dramatic collapse. Prices of nearly every major cryptocurrency plummeted within hours, erasing months of gains in a matter of moments. the sell-off was relentless, with panic spreading quickly across exchanges worldwide. Investors watched in disbelief as their portfolios shrank, and the value of digital assets tumbled to new lows. The speed of the decline was unprecedented, leaving little time for anyone to react or recover. XRP, which had been trading at a strong 282, was among the hardest hit. In just a short span, its price was slashed by more than half, crashing down to as low as $1.20. This staggering drop sent shockwaves through the XRP community, as investors scrambled to make sense of the sudden collapse. Many who had entered the market at higher prices faced devastating losses, and the mood quickly shifted from optimism to fear. The flash crash wiped out billions of dollars in market value almost instantly. News outlets around the world reported on the chaos, with headlines highlighting the sheer scale of the losses. The atmosphere was tense. Traders and investors tried to process the magnitude of what had just happened. Panic and fear became the driving forces behind the relentless selling, as people rushed to exit their positions before prices fell even further. In the midst of the turmoil, investors rushed to sell their holdings, creating a vicious cycle of fear and forced selling. The more prices dropped, the more people felt compelled to get out, further accelerating the decline. Trading floors and online forums were filled with frantic activity, as everyone tried to minimize their losses in a rapidly deteriorating market. This wasn't just an isolated incident affecting a single coin. The crash was part of a much broader market issue, impacting major cryptocurrencies like Ethereum, Solana, and Bitcoin. Each of these coins saw their prices tumble, with red candlesticks dominating trading screens everywhere. The interconnected nature of the crypto market meant that no asset was truly safe from the cascading effects of the sell-off. As prices continued to fall, a wave of liquidation swept through the market. Many traders who had borrowed money to invest were forced to sell their assets at a loss, amplifying the downward pressure. Margin calls and liquidation notifications became a common sight, as automated systems triggered massive sell orders to cover losses. This liquidation cascade only deepened the crisis, making recovery even more difficult. By the end of those fateful days, the crypto market was left in a state of shock. Traders, investors, and analysts alike were stunned by the speed and severity of the crash. The events of October 2025 served as a stark reminder of just how volatile and unpredictable the world of cryptocurrencies can be, and left many wondering what the future might hold for digital assets. Sometimes, all it takes is a single spark to ignite a global firestorm. In this case, that spark came in the form of a tweet from President Trump. The world watched as, with just a few taps on his smartphone, the president sent out a message that would send shockwaves through the financial world. The tweet announced a dramatic policy shift, a proposed 100% tariff on Chinese goods, a move that instantly caught the attention of investors, traders, and governments around the globe. The announcement of such a steep tariff signaled a major escalation in the ongoing trade tensions between the United States and China. Headlines blared across financial news networks, and social media erupted with speculation and concern. The possibility of a full-blown trade war suddenly felt very real, and the implications for the global economy were immediate and severe. Markets around the world reacted with lightning speed. Stock indices tumbled as investors scrambled to reassess their positions. The uncertainty created by the tweet rippled through every sector, from manufacturing to technology, and from traditional finance to the emerging world of cryptocurrencies. The sense of unease was palpable, as traders and analysts tried to make sense of what might come next. Investors, fearing the worst, began to pull their money out of riskier assets. Stocks and cryptocurrencies were sold off in large volumes as people rushed to protect their portfolios from further losses. Many sought the safety of cash or more stable investments, hoping to ride out the storm until the situation became clearer. The impact on the cryptocurrency market was especially severe. Already weakened by previous downturns, the market was ill-prepared for another shock. The president's tweet triggered a wave of panic selling, with prices for major digital assets plummeting in a matter of hours. The speed and scale of the sell-off left many investors reeling. XRP and other altcoins bore the brunt of the crash. As confidence evaporated, these assets were dumped en masse, driving prices even lower. The cascading effect of these sales only deepened the market's losses, making recovery seem even more distant. This dramatic episode highlighted just how sensitive the crypto market is to global events and political decisions. Investors were reminded that, in a world where information travels instantly, markets can be shaken by a single message from a world leader. In the end, this event served as a powerful reminder. In today's interconnected world, a single tweet can set off a chain reaction, impacting markets everywhere and changing the financial landscape in an instant. The president's tweet was the spark, but XRP whales had already set the stage. Whales, holding large amounts of XRP, were selling heavily before the crash. Their actions created a weak market, with over $1.5 billion sold in a month. This selling pressure kept XRP's price down, despite Bitcoin's strength. Smaller investors grew nervous, seeing big players exit. When panic hit, the market couldn't absorb the excess XRP, causing a collapse. The whale's early selling set the conditions for the crash, impacting all investors. The crash's magnitude is clear in the numbers. XRP fell from $2.82 to as low as $1.20, a 55% drop. Key support levels broke, triggering stop-loss orders and forced selling. Trading volume surged, showing the rush to sell. Leveraged positions worth billions were liquidated. A bloodbath for bullish traders. The market chaos was driven by fear and forced selling, catching many by surprise. Beyond the tweet and whale selling, hidden factors worsened the crash. Regulatory uncertainty around Ripple's national trust charter added risk. The missed deadline created nervousness among investors. Hopes for an XRP ETF were overshadowed by whale selling. On-chain data showed some long-term holders buying during the crash. This quiet buying helped stabilize the price, preventing further falls. After the crash, the market was quiet, but signs of recovery emerged. XRP's price slowly climbed from $1.20 to around $2.30. Large investors saw low prices as a buying opportunity. Governments eased trade war fears, calming markets. Technical indicators suggested the worst was over. The market remained cautious, with resistance levels now acting as hurdles. The road to full recovery was uncertain, but the first steps were promising. Post-crash, investors watch XRP's price closely. Key support and resistance levels are critical for future movements. A break above resistance would signal buyer control. Trader behavior and whale actions provide market clues. Global news, especially US-China trade tensions, remains influential. Regulatory developments around Ripple and XRP are also crucial. The future depends on a mix of technical, behavioral, and news factors. The October 2025 crash offers valuable lessons for crypto investors. The market's high risk and reward require caution. Global events can trigger massive price swings. Whales have significant market influence. On-chain data can provide early warnings. Fear and opportunity coexist in market crises. Staying calm and focusing on the long term is key. Every market crisis teaches lessons for the wise investor.